if you're not using this particular strategy, you are missing the exact price and the exact levels where the big players are trading. So let me show you how to spot them and trade with the market makers and not against them. So this is one of those videos which was highly requested. We've been talking about this for a very long time. Even on our live streams, we have been using this a lot. The tool that you see on your chart is called as FRVP, fixed range volume profile. This is a tool which helps you to understand a lot about the volume on your charts rather than using those old school volume indicator which used to be on the bottom. This actually helps you to understand volume at each and every price level. So it is much more better than your old school volume indicators, and it helps you a lot with your trading. So let me quickly get into the explanation part. But before that, let me explain you how this tool works and how you're supposed to use it. In your TradingView, when you go on this particular option, if you just go a bit lower, you'll see this tool called as fixed range volume profile. So add that to your custom tool range, and that's it. So now you have your volume profile. You see different kind of levels, you see different kind of spikes on your chart. I'm sure you must be a bit confused that how are you supposed to use them and what do they signify. So let me not take a lot of your time and quickly give you the explanation. All of this spikes that you are seeing is nothing else but trading volume. So where there is a lot of spike which is going a bit more higher than compared to other spikes, it shows that there was a lot of trading going around at this particular price. All right. So now you can also spot that there are three different levels. So first is your blue line, second is your red, and third is again a blue one. So the top one is called as volume area high or value area high. Second, the red one is POC, and this is the most important level. How you are supposed to trade it and how you are supposed to mark it on your charts, I'll explain you that as well. And the second thing that you see on your chart is called as volume area low or value area low, whatever you want to call it as. So value area and POC, these are some of the most important levels that this particular tool will give you. So there is 70% of the trading going on between these two blue lines. So value area high and value area low. Between these two lines, the 70% of trading volume has occurred. So it makes a lot of sense that market makers were actually interested inside this value area, and that's the reason why they were trading this heavily. But this was all just a context. How are you going to trade this? How are you going to mark it on your chart? And how will you enter on them and how you will exit using this? So let me just start with the explanation right now. So I've just given you the explanation what FRVP is and how it works. It has this blue lines, this red lines and everything which I've already explained. But let's try to understand when are you supposed to use FRVP. So FRVP works in every kind of market scenario, be it a trending market or be it a range bound market. It works in every market. It's just that you need to understand the context of the markets and use it accordingly. So every time when you see a trending market, you are supposed to mark the highest point of the trend till the lowest point of the trend. So for example, I'll mark this again for you guys. So I've used this FRVP tool called again fixed range volume profile. So I see this move, this push toward the downside as a downtrend. So I'll mark the starting point of the downtrend till the ending point of the downtrend, and this is where the most of the volume is. So now if you see, we got a very clean and clear rejection right from this value area low, and after that we have been pushing towards the downside. So now you have a very clear idea that how strong these levels are. And again, just so that all of you know, including volume levels are the most important thing in your trading strategy. No matter what kind of levels you mark, no matter what your entry or exits are, using volume levels in your trading is extremely important. So be it a consolidating market, be it a range bound, pre-breakout, post-dump analysis, finding high volume zones, in every situation this particular tool will help you. Now if we try to understand the core concepts, all right, like as I was saying, this has just three important pointers, which is volume area high and volume area low. But then again, there is something else called as high volume node and low volume node. So HVN and LVN. High volume nodes are this good spikes that you see, and then there is also something called as low volume node where you see the volume was absolutely not there. So you see here the volume was spiking, but here the volume is literally not there. You call this as low volume node and you call this as high volume node. So now we've understood what this tool is, what do they signify, and why are you going to use them. Let's try to understand how are we going to trade using this particular tool. So as I've just marked this in front of you guys from the starting point till the bottom point, every time you visit one of these levels, you can always mark them on your chart. So you marked your volume area low, POC, and your volume area high. So now you've got three important levels on your chart we just rejected right now from our value area low and we are pushing towards the downside. Now the next time when we get inside this level, we can wait for a back test of this and we can get into a good long trade around this. We can have a local lesson and then we can also be targeting our range high. Every time when you are going short at your volume area high, your target is always volume area low. But it's not like if you short here, you are going to be holding your trade till the volume area low. You can always TP at some of the most important levels. I do TP. I do not like to hold the trades till the final target because it does not make sense to hold trades for 10, 20, 30% kind of move. It's better to have a safe and secure and consistent profit rather than targeting some bigger profits and losing whatever you were supposed to make. So now we've just seen that we got a reaction right from this particular level. Now confirmations for this trades can be anything that you guys go for. You can be looking for some negative pin bars, you can be looking for some engulfing candles and whatnot. If it's obviously a negative pin bar, if you're planning to go into a short trade. If you were planning to get into a long opportunity, you obviously need to see a positive pin bar or any kind of bullish candle that gives you confirmation. Now that is completely based upon strategy. This particular video that I'm making is about FRVP, how you're supposed to mark it, and what is the context of this particular tool. So now I've just explained you how you're supposed to mark this in a trending market. Now let's try to understand if you are in a range bound market, just like how we are right now, how you are supposed to mark it. So you need to identify the range. So we have already did that. You want to identify a starting point and the ending point of that range market. And there you go. Here you have all your trades. So you could have went short on your volume area high. You could have went long here, another long, and another long. So you had multiple trading opportunities, but obviously not every level will give you move every time. So you need to be looking out for some of the best trading strategies, some of the best trading confirmation, and only then you are supposed to get into a trade. So do not just randomly get into a trade because you had a particular level around that area, right? So some of the tips that I would like to share with you guys is that always draw this tool. If you're in a trending market, always draw them from the swing lows till the swing highs or from the swing high to the swing lows based upon the market scenarios. Do not just blindly trade your POC level or your volume area levels because again, not every level is supposed to give you the best kind of move. Only the best confirmations will give you the best kind of move. So you always want to trade the best confirmations that you can see. Next would be the most important part, that having multiple confluence with your FRVP levels will be great. So be it some liquidation zone, be it some naked levels, be it some weekly levels or any kind of levels, it's always good to have some kind of confluence around your trading area. I personally like to have at least 3 kind of confluence whenever I am planning to get into a trade. Next, you can always have settings for this tool. You can have a customized setting based upon whatever you like, and it's completely adjustable as well. And next, and the most important part is that FRVP levels can be used as support and resistance level as well. So every time you flip a support into resistance, you can plan it accordingly. So now if you go on a bigger time frame for let's say 4 hours, we have this trending market. So this was a trend towards the upside, and before that we were in a ranging market. So you can mark this as well. You can mark your previous range. Right now what we are saying is that we are getting accepted back in the previous range, and that's how we can easily plan our trade. So we are getting a good push from the volume area low level. We got another trading move. We could have entered at volume area low and we could have targeted the volume area high, and we did actually get to see that as well. So this is the kind of power, this is the kind of push that this particular tool gives you. And you always want to use them because volume is a very important and very key element of your trading. Next, I would like to talk about the mistakes that you guys could have been making if you are already using it or if you're planning to use it. So the very first thing is not using this particular tool accurately in a trending market. So you might not be placing the right starting point and ending point of the tool. So that can be a very big mistake, because if you mess that up, your levels will not be accurate and then you will probably be entering into the wrong trades, right? So that's the very first and most important part. Second is that you might be drawing it from random candles if you are in a range bound market. So it's very important that your starting and ending point are absolutely correct. So that will only be based upon experience. So you need to have some great experience as well. Third is trading every touch of POC. So you do not want to trade POC every time the price is reaching out for this level. You want to have some strong confirmation, and only then you want to get into a trade at your POC or at any of the levels which your FRVP tool gives you. Next is not waiting for confirmation. As I was saying earlier, you always want to have good confirmation no matter how strong your levels are. You always want to wait for confirmation. And next and the last point would be ignoring the context. So let's say if you're in a trending market, the market is pushing towards the upside. Just because you have your volume area high as a resistance level, you do not want to short it because you cannot be trading against the trend. So that's the most important part of this tool. You do not want to be using it against the market. Do not ignore the context of the market. So mastering FRVP can turn random entries into sniper trades, but only if you combine it with context, price action, and patience. So you need to have a great trading strategy. If you guys are wondering what kind of trading strategy you can use, you can again follow the exact same strategy that I use. You can go for crypto market mastery. The link will be in the description and you can check it out. So that was it for this particular video. If you guys have any doubts, any question, just make sure to drop them in the comment section and I'll definitely answer them. Until then, see you and bye.